Ladies and gentlemen, good day and welcome to Premier Explosives Limited Q4 FY25 earnings conference call. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta from Stellar IR Advisors Private Limited. Thank you and over to you, sir.
Thank you. Good evening, everyone. I, on behalf of Stellar Investor Relations, welcome you all to Premier Explosives Limited Q1 FY25 earnings conference call. We shall be sharing the key operating and financial highlights for the first quarter ended June 30, 2024. Today, we have with us the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, Managing Director, and Mr. Srihari Pakalapatti, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance have already been shared on the company's website and exchanges. Now I invite Mr. Chaudhary to share his initial remarks on the company's performance for the first quarter of financial year 2025. Thank you and over to you, sir.
Thank you, Vishal. Good evening, everyone, and thanks for joining. Premier Explosives continues to deliver an important improved performance as mentioned in the earlier calls. As I have mentioned during the last quarter con call, that we have already received the pending revenues in the last quarter from the Israeli export, and this has shown an exponential jump in the revenue during the last year. And also due to an emergency order from Ministry of Defense, and going ahead, we are expected to receive new orders from the Ministry of Defense on regular intervals with a similar quantity. During the quarter 1 of financial year 2025, our revenue has grown compared to previous year, same period, which is a good growth for the company, and even our operating margins have been showing a stable growth momentum. Our current outstanding order book stands at rupees 899 crores and translates into 3.31 times of our financial year 2024 revenue. During the quarter, some of the big orders have been executed, and this will help the company to bid for bigger and better orders from Ministry of Defense as well as Indian defense industry and foreign defense entities. Our orders are at different stage of execution, and our order execution from various entities such as Bharat Dynamics, Overseas, and PSU are being repeated and processed as per schedule. Our defense export orders alone are currently standing at rupees 765 crores. Coming on the recent updates, as you all know, the company will be doing a capex plan, as your company has received the letter from the Industrial Promotion of Investment Corporation of Odisha Limited, IPCOL, informing the state-level single window clearance authority through an in-principle approval for setting up a defense explosives raw materials and ammunition plant in 3 phases at Rayagada district, with a total investment of about rupees 864 crores. Coming to future outlook, Premier is the only qualified Indian company for countermeasures and the only Indian company which specializes in the export of fully assembled rocket motors. In addition to the rocket motors, warheads also Premier has entered into manufacturing and exports. Premier has entered into manufacturing of mines and ammunition as well through Atmanirbhar Bharat initiative. Indigenization lists have been promoted by MOD and Defense Ministry for various defense products which need to be manufactured domestically for the defense sector instead of being sourced via imports. This will also help the future growth of Premier participating in the list. As I mentioned in conference calls, we have supplied first lot of Nipun mines in the month of May-June 2024, and the supplies of balance orders are to be scheduled to complete the financial year 2025-2025. Premier has successfully completed the development of 40 mm HEAP and HEDP ammunition for UBGL and HBGL as per the DCPP program of DRDO. Now we hope that we will be able to participate in RFPs being generated by paramilitary forces and Indian Army. We expect the production and supplies to start in the current financial year, that is financial year ending 2025. In addition to the above statement, the company has also started exporting RDX and HMX. Commercial explosives divisions are performing well and expected to continue in coming years also. In terms of cash flow, we have generated healthy cash profit in the quarter 1 of financial year 25. Along with steady execution of run rate coupled with inherent features of our cost structure, we expect to increase operational leverage in our business. This will lead to enhanced cash flow generation. The improved cash flows will be utilized to strengthen our balance sheet. We remain positive about the defense and aerospace industries and will continue to seek to become a major participant in both the domestic and export markets in these areas. Coming to the defense industry, it gives me great pleasure to announce a significant milestone in India's defense sector. India's defense sector has achieved a significant milestone in self-reliance, with domestic production reaching a record of 1.27 lakh crores in 2023-24, a 16.8% increase from the previous year. Over last 5 years, defense production value has risen by over 60%. The Ministry of Defense reported that public sector undertakings accounted for 79.2% of this output. Defense exports also grew, surpassing rupees 21,000 crores. This growth highlights India's commitment to becoming a leading global hub for defense manufacturing. A role being played by Premier also gives us a great pleasure and pride in exporting the defense products. Now coming to the aerospace industry, micro, small and medium enterprises play a pivotal role in boosting India's aerospace sector by providing essential components and services. However, the sector faces challenges such as high costs and limited access to advanced technology. Government support through policy interventions, financial assistance, and infrastructure development is crucial to enhance the competitiveness of MSMEs and ensure sustainable growth in the aerospace industry. This support can help India become a global leader in aerospace manufacturing also. Now I request Mr. Srihari, our CFO, to share the financial performance.
Thank you, sir. Good evening, everyone. The result presentation for the quarter has been uploaded on the stock exchanges and on the company's website. I believe you may have gone through the same. The revenue from operations for Q1 FY25 stands at 83 crores as compared to 62 crores in the corresponding previous quarter last year, which shows a growth of 34% year on year. Our operating profit for Q1 stands at 16 crores as compared to 17 crores. The operating margin for the quarter stands at 19%. We reported a net profit of 7.3 crores compared to 8.2 crores in the last year's similar quarter. Now coming to the order book, the company's current order book stands at 899 crores, out of which the defense segment forms the majority of 765 crores, which is equal to 85% of the total order book. Explosive segment stands at 28 crores and service segment, which is the operational maintenance segment, stands at 107 crores. During the quarter, the domestic order book stands at 92% and export order book is at 8% of the total order book. The order book shows the solid and strong growth towards the previous year. We are very much confident that with our continued execution run rate in the forthcoming quarters, we will be continuing with the growth trajectory. With this, we will now open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neeraj Manshika from White Pine Investments Management Private Limited. Please go ahead.
Sure. Thank you for the opportunity. I just had a question on the execution of shafts order. When do you see the scale up of the revenues from your side? Because the order has been received some time back, and the run rates of revenues are yet to show that scale up for the shafts and flares.
Yeah, the shafts and flares order together, we are dependent for deliveries on some components are imported components which got delayed due to the Red Sea problem. This was mentioned by me in the last con call also.
Yes.
Now the material has come to us and then process is going on, and the first consignment of shafts are expected to be delivered in the month of September.
Okay. But sir, would there be some in the past we have seen some penalties being given by the government because of the delays. So would that be applicable, or is the penalty not applicable because of the delay?
That will be applicable because government has no role in this. So the delays cannot be attributed to government or anything. So once we cross that, LD will be applicable to us.
Okay. And what would any range of the LDs that can come to us in amount or percentage?
No, actually that depends on the delivery schedules. We are expecting the deliveries to be delayed by another 2 to 3 months. So the LDs are almost. So as per the contract, I think there are LDs which is equal to almost 15%.
So 18% a year you're talking?
15%, yeah, to the maximum LD.
Okay, so it is 2 to 3 months. Assuming it's 3 months, is it right to say it will be around 3-4% or so?
Sorry?
If it is 3 months of delay, then LD would be how much? Like it would be around 3% range or would be 15% range?
No, normally the LD is about 1.5% per every week. I think after 10 weeks, automatically we will be reaching almost a higher slab of the LD range.
Okay. Got it. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Avi Agrawal from Arihant Capital Market Limited. Please go ahead.
Hi, thanks for taking my question.
Yes, sir.
Hello, can you hear me?
Yes, sir. Please go ahead.
Yeah, I want to know your outlook about the order book, since I can see a slight decline in the order books from March 24. So how do we see the order book going ahead? And the margins are shown on a year-on-year comparison basis. The EBITDA margins are around 26%, and right now we are around 19%. So what's your outlook on that?
So first thing is there has been some execution during last 3 months, and because of that the order book has come down, especially in the defense. First part.
Okay.
Second part, I think especially during the quarter there were no significant inflows. There were no significant order inflows during the particular quarter, which may not be the case in future. First thing. Second thing, the order. Our EBITDA margins are about 19% as compared to last year. It was about higher price, but it depends on the product mix basically. So it varies between 19, 22, 23, 24%. So it varies, depends on the product mix.
So what is the guidance you would like to give for EBITDA margin going forward?
Like always, we give the indication if in the range of around 18% is the EBITDA. Otherwise, some quarters it may be higher, some quarters it will be lower. So consistently, we'll have to think about that level.
Okay. Thanks for taking my question. Thank you.
Thank you. The next question is from the line of Sarjeet Yadav from Mont Intra Finance Private Limited. Please go ahead.
Good evening, sir. So I have a question regarding the current order book. As we see the majority of the order book from shafts and flares, and we expect it to be executed during the next 2 quarters. So what are the new orders we are looking at which may fulfill the order book and maintain the guidance of 809 crore which was given in the last quarter?
See, we are participating in multiple RFPs from defense industry and other industries, and it is not a regular flow from every month-to-month basis. So definitely we are expecting that shafts and flares also there is RFP which we are participating, and for other rocket motors, and also parallelly we are getting the export orders also. So we hope that we will be in the range of same 800 to 1,000 crores, it will be maintained.
So as I said, so by the end of this year, approximately same order book is likely to remain.
Yes, we expect.
Okay, thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. I have a couple of questions. The first one is essentially drawing Neeraj's question further on the LDs. Now, since this Red Sea crisis is something that was not in our control also, so won't we be contesting this LD under force majeure clauses, or does it doesn't fall under this force majeure at all?
See, the orders are accepted on emergency procurement basis, and these LDs are already factored into our pricing and costing at that time. So, like we have announced earlier also, if we have to execute everything in 1 year, then we will be doing a turnover of 800-900 crores. But we are not, right from the beginning, this is expected that we will be half the quantity we will be executing in this year and half next financial year. That is the schedule we are following. So this LD is already factored into it, and LD cannot be waived off because this is an emergency procurement order.
Okay, that's very clear.
Yeah.
The second question is on essentially the programs that we are seeing, particularly on missiles. Now, as we understand that BDL has already started executing that 2,700 crore order of extra. Akash possibly will get executed from Q1 FY2026. So, what kind of orders do we expect from these two platforms? And any other major platform that we are expecting orders from in this financial year?
This financial year, the missile side, this financial year major orders, at the year end orders may mature, but supplies will start next financial year. BrahMos is one important project where a lot of activities going on, and then government is planning to export. And Akash, of course, is there. This financial year itself, we have delivered Akash some important quantity which BDL is going to export. So in addition to that, we are expecting some contribution from MR SAM and Astra in the current financial year.
Okay, the last one from my side is on exports. Now, we have seen one of your years, the listed one, of course, receiving a significant number of export orders, of significant quantum, I would say, in Q4. Now, we are also into high energy explosives, and also, do we also expect some kind of similar traction in export orders? And is it possible to provide the export, more color on export order book at this stage?
See, presently our export orders include the high explosives also, what you mentioned. 68 crores. Oh. 68 crores is the export order. Yeah. This current order book includes the orders for high explosives, and also because of our self-consumption, we are not able to fully cater to export business, export market, but we are expanding, enhancing our capacity in RDX and HMX. With that, I think it will go up. Present order book is at 68 crores level for the high explosives export order book.
And just the ultimate last question, is it possible to provide the CapEx guidance for this year?
Beg your pardon, please repeat your question.
CapEx guidance for this year.
CapEx guidance.
So here there are two issues. One, the expansion of existing capacities, which we are expecting to incur at least 25 to 30 crores in next 6 months, which we are already prepared for that with the internal accruals and some sort of term debt. So with regard to the additional facilities at the new locations like Odisha, those things, though, for that we need a capex of about 250 to 275 crores, which we will take up at a later stage once everything we are ready for with the documentation. So these two are different, entirely different.
Okay, got it. Thank you so much, sir, and all the best.
Thank you. The next question is from the line of Ansh from Systematics Group. Please go ahead. Sorry to interrupt you, sir. May I request you to please come near to the mic and speak?
So, has the company seen any new innovation in this quarter year, that's going to make it growth? Any innovation you foresee?
Current quarter innovation in terms of new products or something?
New products.
We have already observed the DRDO technology for mines and 40 grenade ammunition, as I mentioned in my initial note. So that I don't call that innovation. I call it the new products added to our list by absorbing the technology. Yes, we have absorbed, but in terms of business, it may not reflect in this quarter or coming quarter. It will take 2-3 quarters before it gets converted into business.
Okay, and I'm also wondering that the revenue is about 829 million, right? Rupees for Q1 FY25, right? 34% YOY. So you project that to sort of grow, right, in the foreseeable future, the revenue based on the current standing of the operations and the services?
I think the growth, overall year, the growth in revenues will be much ahead of, much better than this, overall year.
Oh, okay. And also I want to ask that I also heard that from one of the questions that the EBITDA margin for FY25 is about 19%. So that's lower than last year, right? And the EBITDA margin.
So this is 19% is only for the Q1. So, but it is not the guidance for the whole year. Okay. So first, because so last year it was 22%. I think it varies. Depends on the. It depends on the product mix. A lot of other factors influences the EBITDA margin.
Oh, okay. I got it. One more thing. So you also said that your defense, the defense industry is seeing the most amount of growth, right, in terms of the revenue and overall sales. Defense industry services.
Yeah, defense. In line with our order book, where you can see the significant orders from the defense, which are supposed to be executed in this year and next year. So obviously, the major revenue is expected to come from the defense, at least in 24, 25, and 26.
For us, that is for India.
Oh, okay. Thank you so much.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Ashish Soni from Family Office. Please go ahead.
So regarding the shafts and flares, was it possible to get it by aircraft, so that raw material, whatever import, and is there any mitigation plan for avoiding such thing in future?
See, in flares, the payload is explosive material.
Okay.
That has to come by sea only in the containers. By air we can get, but the charges will be much higher. The shaft material, which is inert material, that can come by air.
But any mitigation plan is company taking to avoid such scenario, because Red Sea issue is not going away so soon, right? And you have still some more orders.
Now the Red Sea issue is over, so we got our first consignment of shaft payload. So the assembly is going on, and we hope that in future it will not be there.
And other thing you mentioned in the opening remarks that you are getting approval from paramilitary forces and armed forces. How much of like revenue or order book that can help, and from which year onwards?
That is about the 40 mm ammunition, I think you are talking about.
Yeah.
We expect some contribution only in the next financial year.
Will it be substantial to current revenue base, or it will be like meager amount only?
It is neither meager nor substantial. Yes, it will be. That also will contribute probably another 10% or 15% of the turnover.
Okay, sir. Thank you. All the best.
Yeah.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Praveen J. from Sincere Syndication. Please go ahead.
Hi, sir. Am I audible?
Yes, sir, please.
Thanks for the opportunity. Sir, my first question is is again on the line of chaps and flash. So we implemented now that the first shipment we can expect in the month of September. Sir, how the total order would be broken here, sir, in terms of revenue recognition, and in which quarter going forward we can expect major revenue to be booked in this particular order of chaps and flash?
I think this is only an expectation because it depends on a lot of external factors, but about 60 to 70% revenue is expected to account in this 24-25, and the balance will be in the next year.
Right, sir, right. Sir, and I have one more doubt on the capex side. So, on the Odisha capex, which we are saying, which is about 200 crores, what would be the asset turnover which is expected in that particular asset which we are planning for in Odisha?
It should be about 3 to 4 times, sir.
3 to 4 times. Right, sir. So these were the 2 questions from my side. Thank you for taking it.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rupen P. from RN Associates. Please go ahead.
Yeah, thanks for the opportunity. My question is, it pertains for the longer term, let's say over next 4 to 5 years. Because, you are in the process of setting up a greenfield facility at Odisha, and which is the biggest capex undertaken by the company in its history. So, considering that over next 4 to 5 years, where do you see overall company in terms of say size? Current year you may be targeting maybe north of 700-800 crore of revenue. So going forward over next 4 to 5 years, with the kind of capex you all are going to undertake, where do you see the company in terms of say your defense capability, defense revenue space as well as aerospace? So that's so just if you can share your perspectives.
We look at 1,000 crores turnover in the coming 5 years. That much only we can look at. Beyond that is difficult to predict.
No, sir, because in any case, current year itself is going to be much better because, if you are successful in executing.
Next year, we have targeted something like 500-600 crores. But after that, sustaining this is the important thing. And we are looking at something like 1,000 crores in the coming 5 years.
And in terms of capabilities, like say business mix within the defense vertical, like currently, missile programs that constitutes lion's share. So going forward, what other capabilities you are developing, and how significant is that going to be in terms of overall contribution to the revenue?
Sir, I think basically you are mainly focusing on Odisha Greenfield project, right? So this is actually basically that facility, as I have explained in the earlier question, that facility is expected to add 5 to 600 crores over a period of 3 to 4 years. You got my point?
Okay.
And we are not in the commodity business that consistently the offtake will go on increasing, consumption will go on increasing. No, we are in the business of war machinery and war. So the consumption, when the conflicts are there, the consumption will be more. But later when the peace is there, it will be less. So we cannot say that every year we keep on growing and expanding only. So that's why we have set a target of 1,000 crores, and then which is a reasonably achievable target, and then we should maintain consistently beyond that. That's the idea.
Right. And coming to space sector, like say, government is encouraging and soliciting, participation of private players in SSLV, that is the small satellite launch vehicles. So where do we stand on that front?
See, that needs a large capital investment. The SSLV, if you have to get into it, we are the most qualified to get in. But that needs a lot of capex, and we have to look at the returns on the capex, the present thing, and then the predictions and all those. At this stage, commenting on that is a little difficult.
Okay, so would it be fair to presume that we would be participating in that opportunity as a component and subsystems or sub-assembly supplier?
Yes, we are already there. We have participated in it. It's going on.
Okay. So space vertical, how big can it become, say, over next 4-5 years?
See, what we hear and all those the predictions from in space and then NSIL and all those, it's going to be very big, large. But it is expected to take 10 years. So you have to invest and then wait for the 10 years. That is the thing in it. So we are there for subsystem suppliers and all those. On our own entering is a little doubtful affair.
Okay. Thank you. That's it from my side, and best wishes for future.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Prathamesh Sawant from Meyer Asset Capital Markets. Please go ahead.
Yeah, thank you. So I'm with the company, so just wanted to understand, of the products that we supply to defense, what is the annual consumption size of the total market, and like what percentage are we serving right now?
I don't think this can be answered by us. No.
Any ballpark figure, where we can understand what's the size of market, like of the explosives or, defense material that we supply to the state?
See, we depend on mainly on the MOD's consumption. And the consumption data and all those are not available for general usage and all those. Yes, the requirement, it comes on RFP to RFP, and we supply the RFP, and then we go to the next product or probably next tranche of quantity which comes. So we cannot predict consistently this much is going to be consumed regularly every quarter or every year, and then there will be and all those.
Okay.
Yeah, that's not right also.
Okay, sir. Thank you. That's it from my side.
Right.
Thank you. The next question is from the line of Neeraj Mansika from White Pine Investment Management Private Limited. Please go ahead.
Just wanted to more clarity on the plan of Odisha CAPEX. This is a 3-phase CAPEX and total spending of 860 crores, right?
That is in a 10 years period in 3 phases.
Okay. And so when you say in 5 years you'll be completing one phase with 275 crores or higher than that?
First phase will definitely be completing. Second phase probably will be in the execution stage.
Okay. So, but when you said you do, what products would you make there, and what gives you confidence that we can have revenues from that when this 22
Right now, we plan to go for explosive raw materials like TNT and then others. And the next step comes is the products with PAT, filling of bombs and warheads and artillery. So these are all the long list.
Okay. So it will be more like ammunition and the explosives on the defense side. Am I right, sir?
Yes.
And so when you're saying you will have a revenue of 500 to 600 crores, this will be that once you put up the plant, you will bid up for those projects because you have approval. The chances will get the revenue from those projects, those cases.
From the new product, products, we are expecting to achieve our targeted 1,000 crores.
So then why do you give a guidance of 500, 600 crores? I'm assuming that you would run full utilization after say 5 years because there's hardly any capacity in India. And when you're spending of 275 crores, as a turn of 300 means 800 crores of revenue, but you are giving a guidance that you can reach 500 crores. So
can you please speak a little slow? I think.
Okay, so I'll see. So you have given a guidance of 500, 600 crores of revenue on that particular project, phase 1, in 4 years from now. And but you're spending 275 crores, which is hard.
500, 600 crores turnover is expected from the second phase. First phase will be at 200, 250 crores.
So total revenues after phase 2 completion would be 700, 800 crores. Is it right?
Yeah, you can take that.
And so when can we expect the first phase to start?
As soon as the land is allotted.
So any thoughts on that? Like what is the timeline you're looking at?
The indication from the Odisha government is around 6 months.
And sir, when do you see the raising of the
project construction execution? Because it's a greenfield project, we can expect some 1.5 to 2 years for execution of the project. Then the trial production, trial runs, then the regular production, another 6 months you can add.
Okay. And so, okay. But would it be a similar margins or higher? Because generally, focused defense manufacturing should get a higher margin, considering there's also an entry barrier of approvals, etc.
Yes, present geopolitical conditions, the demand and due to demand and supply gap, the raw material explosive prices are high. So margins will be definitely better at the moment. But whether future it will remain same or there will be reduction after 2 years, 3 years, we'll have to see that. But as on date, the margins are good.
Any range you can speak about on this?
So most of these products are the new products, which it is difficult for us to tell the range. We are not manufacturing at all at this moment, you know that?
Okay, understood, sir. No, I got a good color on that. Thank you very much for this. Yeah. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Sachin Goel, who is an individual investor. Please go ahead.
Yeah, hi, sir. So basically, as government is opening doors for the exports and defense sector, so what are the market opportunities for our company? And second thing is that, is this exclusively when any of the machinery making or if any of the other companies selling the products in the export? So there is any binding agreement on us that they have to take the raw material or they have to take the chemicals from us only? Is it something like that?
We don't have any such precondition or anything, nothing. We are exporting directly on our own rocket motors and all those. You are aware of that. The machinery and all those, we have no any attachment or any binding with anybody.
Okay, so there is no long-term contract as such that when hardware is sold, so in that case, our chemicals needs to be taken from us or something like that?
No.
Okay. And what are the possibilities? Sorry, I joined late. Might be that you have answered. For the FY25, where are we looking on the numbers?
So normally we don't give any guidance, but I think it would be much better than what it was in 24.
Okay.
Mr. Sachin, does that answer your question?
Yeah, thank you. Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Kaushal Kedia, who is an individual investor. Please go ahead.
Hi, sir. Can you hear me? Because there's some disturbance in the line. Sir, I just wanted to know that you said that after phase 2, the Odisha capex will yield a revenue of around 7 to 750 crores.
Yes, sir.
Is that right?
Go ahead.
Sir, my question is that after phase 2, the Odisha facility should yield a revenue of 700 crores after phase 2.
We are expecting a total yield of 1,000 crores. 1,000 crores is what we are expecting in 5 years' time.
This is 1,000 crores at the company level or 1,000 crores at only the Odisha plant? Okay, company level.
Company level. Out of that, Odisha can be anything between 300 to 500 crores.
Okay. And so you said internal, the current capacity to enhance that, you will be incurring a capex of around 20 to 25 crores.
Yes, sir. Yes, sir.
Okay. Okay, sir. I believe you are being very conservative on the numbers because obviously it's very difficult to judge beyond 1 year, 2 years. But I believe you are being very conservative. Is that right?
The nature of business here is like that. We have to be
fair enough.
It's not like a FMCG.
Sorry to interrupt you, sir. There's a lot of background noise from your end.
Okay, that's it from my end. Thank you, sir. Thank you.
Thank you. The next question is from the line of Devaraju M, who is an individual investor. Please go ahead.
Do we have any, estimation like, this year or next year, like, so much of percentage of revenue or profit growth we are expecting? Do we have any such?
But normally we don't give any guidance, sir. But I think we would, I think definitely the growth would be very good. We are expecting the good growth comparatively. But companies normally follow the policy not to give any guidance.
Oh, okay.
Thank you. Ladies and gentlemen, you may press star and 1 to ask the question. The next question is from the line of Praveen J from Sincere Syndication. Please go ahead.
Hi, sir. Just a follow-up question. A question on bookkeeping. Sir, the tax rates which we have recorded for the last 2 quarters is pretty higher, north of 30%. So can you just give some light on this, sir? And how is it going to be going forward?
Sir, it would be, we are the bracket of about 22%, but keeping in view of the previous years, we were carrying the carry forward losses which happened in 2018, 19, and 20, 2021. So we were coming under MAT basically till last year, but that is not going to happen from now.
Sir, can you please repeat, sir? I'm not able to understand.
Sir, earlier, I mean, till last quarter, we covered under MAT.
Okay.
So all our carry forward losses, everything was wiped up. Now we cover we come under the normal tax laws.
Got it. So going forward, what is the rate which we can assume?
It will be about 20 to 23%, sir.
20 to 23%.
Yeah.
Okay. Thank you for this.
Thank you. The next question is from the line of Bharat Gupta from Fair Value Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. A couple of questions from my side, sir. Like in response to a previous participant question only. So can you give us a sense, like in terms of the total RFQs which are floated by the Defense Ministry, like what can be estimated size and how are we placed in that?
I don't think we'll be able to tell that.
But sir, can you give us a
very general question is very general.
What remains as a strike rate for us, like in terms of our bids and everything, like what generally remains as a strike rate, and just the quantitative bit on the overall, you can say market size in terms of the RFQs which we generally see happening on a recurring basis.
We are in the ammunition and other products related to ammunition business. So these RFPs keep coming and then RFPs also don't mature. So I don't think I have any figures. You have any such figures with you? I don't think we will be able to give that.
Okay. And sir, with respect to like the Odisha facility, so phase 1, you expect that after getting out the land, it will take near about 1.5 years. And
yeah, 1.5 to 2 years.
Right. And any estimation like with respect to phase 2, like it will be close to 3 to 4 years, like where we can target close to 500 crores of revenues from that particular facility?
So actually, we have projected phase 1 from between 1 to 3 years, and from 4th year the revenue will start coming. For the phase 2, we projected between 4 and 5, and the revenue will start coming from the 6th year. Like that, we have made the plan.
Right, sir. Cumulative 780 odd crores is it will be the investment from us.
For the first phase, which will be completed by 1st to 3rd, and from 4th year onwards, the revenues will start coming. And by 5th year, I think we are expecting the revenues to add by about 400 to 500 crores. That's what we mean to say.
Right, sir. That's it from my side, sir. Thank you so much.
Thank you. The next question is from the line of Shantanu Chatterjee from Mount Intra Finance Private Limited. Please go ahead.
Thank you, sir, for this opportunity. My question is on your export side. I want to know about the margin profile of the export orders and what is the CAGR growth rate we are expecting for the next 3 to 4 years.
Sir, actually what happened, our total revenue for the last year, the export revenue comprised of 26% last year out of the total revenue. The first quarter itself, our export sales contributed 28%. So this year we are expecting that the contribution from export will be about 18 to 20% going forward. Okay, so our order book, most of this order book will be executed in next 9 months, and we are expecting some export orders to come.
And sir, margin profile of the export orders?
Sir, we are making the bulk product. When we take the bulk orders, I think normally we take the margins which are more or like in line with our domestic.
So there is no as such dilution as far as the margin is concerned?
We don't see any dilution as far as exports are concerned.
Okay, okay. And another one, sir, want to know about the expected market size of the solid propellants in India.
Difficult, sir, to answer this because solid propellants are used for space as well as defense. Space consumption is much larger because space rockets are much bigger and all those. Whereas defense...
Sir, want to get just... sorry to interrupt you, sir. Just want to get some ballpark figure that what would be the actual market size over here in India?
If you look at the space and other things, I think it is expected to go to up to some 1,500 tons to 2,000 tons per annum. That is all space and defense and all those together in the coming 3-4 years.
Okay, sir. Okay. Thanks a lot, sir.
It is not anybody's statistics or anything.
Okay, okay.
Thank you. The next question is from the line of Sachin Goel, who is an individual investor. Please go ahead.
Hello.
Yes.
Thank you, sir, for giving this opportunity. I just want to know what is the estimated order book size we are having for the year 2025?
It will be maintained at the same level, some between 900 to 1,000 crores. That is what we expect and plan.
Sorry, sir, not able to hear you. Can you please pardon?
It will be maintained in the same level, that is 900 to 1,000 crores per annum, not per annum, 1,900 to 1,000 crores order book. We expect to maintain that at that level. That includes defense as well as domestic market.
Okay. So for FY25, we are having an estimated order book size as of now is for 900 to 1,000 crores.
Yeah.
Okay. Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Mr. T.V. Chaudhary, Managing Director of Premium Explosive Limited, for closing comments.
Yeah, thank you everybody. I think we could answer whatever you wanted, even though 100% we could not satisfy you with our answers, but we tried our best to meet the requirement. And thank you very much for showing interest in our company, and also we assure you we'll put our full effort for bringing up your company. Thank you.
On behalf of Stellar IR Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.